Welcome back. I'm Lynn Stone, and this is the Flip Side of Death podcast. Today, I will be discussing the second part of this two-part series where I'm going to do a deep dive into taxes, wills and trusts, and property you forgot about. Let's dive in. Now let's talk about the big three: taxes, insurance, and investments. Let's start with taxes. When you die, your taxes don't die with you. Your estate is responsible for filing final tax returns. What your family needs is your past tax returns. Keep at least 7 years of tax returns. Why 7 years? Because the IRS can audit returns up to 6 years back in cases of substantial underreporting. Store them with physical copies in your life and legacy binder, digital copies in your cloud storage. 2. Your current year tax documents. Where do you keep W-2s and 1099s, receipts for deductions, charitable donation records, business expense records, and investment statements? Your executor will need these to file your final return. 3. Tax professional information. If you use an accountant or tax preparer, their name and contact information, where past returns are stored, and any special tax situations such as business, rental property, or foreign accounts. 4. Your filing status and approach. Do you file jointly or separately? Take standard deduction or itemize? Have any ongoing audits or disputes with the IRS? Or owe back taxes or have payment plans? And 5. Property taxes. Don't forget about property taxes on your home, rental properties, land, and vehicles. Document when they're due, how they're paid, and account numbers. Estate taxes. Most estates don't owe federal estate tax. In 2024, the federal estate tax exemption is $13.61 million per person. If your estate is worth less than that, no federal estate tax. But some states have their own estate or inheritance taxes with lower exemptions. Check your state's laws. Now let's talk about insurance. You probably have multiple insurance policies, and your family needs to know about all of them. Life insurance is the big one. You should document the company name, policy number, the type, which would be its term, whole life, or universal, the coverage amount, beneficiaries, including primary and contingent, how to file a claim, where the policy documents are, premium amount and due date, and agent contact information. It's critical to check your beneficiaries. We've talked about this before, but it bears repeating. 45% of people never review their beneficiaries after initial setup. Check yours right now. Are they current? Are they who you want? Home insurance. You should document the company and policy number, coverage amounts for dwelling, personal property, and liability, deductibles, premium and due date, agent contact information, how to file a claim, and special riders such as jewelry, art, etc. Auto insurance. For each vehicle, include the company and policy number, coverage, which could be liability, collision, and comprehensive, deductibles, premium and due date, agent contact information. Health insurance would include your company and policy number, group number if through employer, coverage details, the premium if you pay it directly, how to file claims, and customer service number. Other insurance. Don't forget disability insurance, long-term care insurance, umbrella insurance, business insurance, or even pet insurance. Finally, let's talk about investments. Types of investment accounts include brokerage accounts, which would have taxable investment accounts, where you can buy and sell stocks, bonds, mutual funds, or ETFs. Retirement accounts, which would include 401ks, 403bs, and 457s, which were employer plans. IRA or Roth IRA, which would be individual plans, pension plans, or annuities. Other would be your 529 college savings plans, HSA, which is a health savings account, cryptocurrency, real estate investments such as REITs, or rental properties. For each account, document the institution name, such as Vanguard, Fidelity, etc., the account type, 401k, IRA, or brokerage, the account number, the approximate value, beneficiaries, which, by the way, make sure you check those to make sure they're current, investment strategy, which would include aggressive, conservative, target date fund, login information, financial advisor's information if you have one, and contribution details if you're actively contributing. A special note on retirement accounts. Retirement accounts have special tax implications when inherited. Your beneficiaries need to understand the required minimum distributions, which are RMDs, tax consequences of withdrawals, 10-year rule for most non-spouse beneficiaries, spousal rollover options. Consider leaving a note explaining these or directing them to consult a financial advisor. Your investment philosophy. Your family might wonder, should they keep your investments or sell them? Leave guidance. I've invested for long-term growth. Don't panic and sell everything. Consult a financial advisor before making major changes. Or, my investment strategy was aggressive because I had time. You might want to shift to something more conservative. Talk to a financial advisor. Cryptocurrency. Yes, again, if you have crypto investments, document what you own, which would be Bitcoin, Ethereum, etc., where it's stored, such as Coinbase, Binance, hardware wallet, current approximate value, login information, recovery phrases or seed phrases, which is critical, and your investment thesis, why you bought it. Real estate investments. If you own rental properties, REITs, real estate partnerships, or vacation properties, document the property addresses, deed locations, property management companies, rental income details, expenses and mortgages, and tax implications. So here's your action step. This week, document for taxes, 1, where past returns are stored, 2, current year tax documents location, 3, tax professional contact information, 4, property tax information. For insurance, 5, all insurance policies with numbers and beneficiaries, 6, check all beneficiaries, update if needed, 7, agent contact information. For investments, 8, all investment accounts with values and beneficiaries, 9, financial advisor contact information, 10, investment philosophy or guidance. Put all of this in your life and legacy binder. Share with your partner and executor. Let's talk about wills and trusts. These are the legal documents that determine what happens to your assets when you die. The will. A will is a legal document that names an executor, who is the person who manages your estate, specified who gets your assets, names guardians for minor children, and outlines your final wishes. The problem with wills is that wills go through probate. Probate is the court process of validating the will, paying debts and taxes, distributing assets. Probate typically takes 6 to 18 months, sometimes years for complex estates. Probate is public record. Anyone can see what you owned and who got it. And it's expensive, 3 to 7% of estate value in fees, and stressful for your family. The trust. A trust is a legal entity that holds your assets, avoids probate, takes effect immediately upon death, remains private, and can include specific instructions for distribution. The types of trust include a revocable living trust, which is where you control it while alive, can be changed or canceled, avoids probate, and doesn't reduce estate taxes. And the irrevocable trust, which can't be changed or after creation, reduces your estate taxes, protects assets from creditors. A special needs trust, which provides for disabled beneficiaries, doesn't disqualify them from government benefits. And testamentary trust, which is created by your will, takes effect after death and still goes through probate. Do you need both a will and a trust? Most people need both. The trust holds most of your assets and avoids probate. The will acts as a pour-over will that catches anything not in the trust and pours it into the trust. The will also names guardians for minor children. Trust can't do that. What your family needs to know. 1. Do you have a will or trust? Surprisingly, 60% of Americans don't have a will. If you don't have one, stop everything and create one now. 2. Where are the documents? Your family can't execute your will if they can't find it. Store the original with your attorney. Store a copy in your life and legacy binder. Also put a copy in your safe or lockbox, and have a digital copy in your cloud storage. 3. Who is your executor? The executor is responsible for filling the will with probate court, paying debts and taxes, distributing assets, and managing the estate. Your family needs to know who this person is and how to contact them. 4. Who is your attorney? If you use an attorney to create your will or trust, you need their name and contact information, where documents are stored, any special instructions. 5. What's in the trust? If you have a trust, which assets are in it? Typically, this would include real estate, bank accounts, investment accounts, or business interests. Make sure your family knows what's in the trust and what isn't. 6. Are your assets properly titled? This is critical. For your trust to work, your assets must be titled in the name of the trust. Example, and this is wrong. John Smith owns the house. And the correct way is that the John Smith Revocable Living Trust dated 1/1/2020 owns the house. If assets aren't properly titled, they go through probate even if you have a trust. 7. Review and update regularly. Your will or trust should be reviewed after major life events such as marriage, divorce, birth, death, or relocation. It should be reviewed every 3 to 5 years. It should also be reviewed when tax laws change. So here's your action step. This week, if you don't have a will, create one. At minimum, use an online service like LegalZoom or Rocket Lawyer or Trust and Will. Better would be consulting an estate planning attorney. 2. If you have a will or trust, locate it. Put a copy in your life and legacy binder. 3. Tell your family where it is. Walk them to the location. Show them exactly where it is. 4. Review your executor designation. Is it still the right person? Have you asked them? 5. Check asset titling. Make sure that trust assets are properly titled. Because without a will, the state decides who gets your assets, and that might not be what you want. Before we close, I want to tell you about something shocking. There is $70 billion in unclaimed property sitting in state treasuries across the United States. $70 billion. This is money from forgotten bank accounts, uncashed checks, insurance policies no one knew about, safe deposit boxes, old paychecks, utility deposits, stock dividends, and tax refunds. After 1 to 5 years of inactivity, depending on the state, banks and companies turn this money over to the state, and it just sits there, waiting. Here's the thing. 1 in 10 Americans has unclaimed property. The average claim is $892. The largest claim ever, $32.8 million in Connecticut. And it never expires. You can claim it anytime. But if you die without claiming it, your family has to prove they're related to you and have the right to claim it. That requires documentation. So here's what I want you to do. Right now, pause this episode and go to missingmoney.com. It's a free database that searches all 50 states. Type in your name, see if you have unclaimed property. Did you find anything? If you did, claim it. It's your money. And then, this is the important part, document all your accounts so your family knows what to claim when you die. Because $70 billion is sitting unclaimed. Don't let your money be part of that. All right, let's recap. Today we covered taxes, insurance, and investments, where you store 7 years of tax returns, document all insurance policies, check all beneficiaries, list all investment accounts with values and beneficiaries, leave investment guidance. Wills and trusts. Create a will if you don't have one, document where it's stored, name your executor, check asset titling for trusts, and review every 3 to 5 years. And unclaimed property. Check missingmoney.com. Claim what's yours. Document all accounts for your family. Here's what I want you to do this week. Keep working on creating that money master list from last week if you haven't finished it yet. Also, keep working on creating your bill master list. And then add on check missingmoney.com. See if you have unclaimed property. And tell your partner where everything is. Walk them to your life and legacy binder. Show them where the lists are. Show them how to access accounts. Money is power, but only if your family can access it. Documents are keys, but only if your family knows where they are. Next week, laundry, dishes, and vacuuming. The household chores your partner might not know how to do. And yes, this matters, because grief is hard enough without figuring out how to run the washing machine. Until then, create your list, check your beneficiaries, Tell your partner where everything is, and remember, death is inevitable, chaos is optional. I'm Lynn Stone. This is the Flip Side of Death podcast, and I'll see you next week.